The head and shoulders pattern is a widely recognized chart pattern in Forex trading that can signal potential trend reversals. It's named for its visual resemblance to a head between two shoulders. This pattern is considered a powerful tool in technical analysis for identifying potential changes in market direction. The head and shoulders pattern can appear in both bullish and bearish trends, and it consists of three key components. 1. Left shoulder. The left shoulder is a peak that occurs during an uptrend. It's typically followed by a retracement or pullback. 2. Head. The head is the highest peak in the pattern. It occurs after the left shoulder and is followed by another retracement. 3. Right shoulder. The right shoulder is the third peak, which is lower than the head and similar in height to the left shoulder. It is followed by another retracement. There are two main types of head and shoulders patterns, bearish head and shoulders. In an uptrend, the left shoulder forms, followed by a higher high, the head, and then a lower high, the right shoulder. The bearish head and shoulders pattern suggests that the uptrend is losing momentum, and a reversal to a downtrend could be imminent. A break below the neckline, a support level connecting the lows of the retracements, confirms the pattern and signals a potential downtrend. Bullish head and shoulders. In a downtrend, the left shoulder forms, followed by a lower low, the head, and then a higher low, the right shoulder. The bullish head and shoulders pattern suggests that the downtrend is losing momentum, and a reversal to an uptrend could be approaching. A break above the neckline, a resistance level connecting the highs of the retracements, confirms the pattern and signals a potential uptrend. Key points for head and shoulders patterns. 1. Neckline confirmation. The neckline acts as a key level of support or resistance. A break below the neckline confirms the bearish pattern, while a break above the neckline confirms the bullish pattern. 2. Volume. An increase in trading volume during the breakout can provide additional confirmation of the pattern's validity. 3. Price target. Traders often use the height from the head to the neckline to estimate the potential price movement after the breakout. 4. Pattern duration. The longer the pattern takes to form, the more significant the potential reversal may be. 5. False signals. Not all head and shoulders patterns result in successful reversals. Traders should use these patterns in conjunction with other technical indicators and consider the overall market context. As with any trading pattern, the head and shoulders pattern should be used as part of a comprehensive trading strategy and not relied upon in isolation.
Are you a trader? Aren't you profitable yet? Do you need a free economic calendar? In MetaTrader 4, go to Market tab and search for Porsage. You can use Porsage News utility for free.
We express our gratitude for your attention. Porsage Forex Academy ensures weekly Forex and crypto analysis and forecast to keep you updated. Optimize your trading decisions with our daily Forex and crypto signals. Support us by liking, commenting, and subscribing to receive our profitable signals and insightful analysis.